Good morning. It's Thursday. We're so close to the weekend. We are up to our FICO score in Credit 101. And we're just going to go through this. And then at the end, there is some independent practice for you. You're going to have today and tomorrow to complete this and get it to me. And that's that. All right. So the word FICO stands for Fair Isaac Corporation, which was the company that created this standard for all lenders. So it was began in 1956, so quite some time ago, but became really famous in 1987. So your FICO score is a number that tells the lenders about you and your potential risk if they lend to you. So this FICO score is like your credit score, and this is what it is your credit score, and it's what determines how much companies will loan you, how much interest, all of this other stuff. So companies actually purchase your credit score from three main agencies. We'll talk about more of that a little later. So the higher the number, the lower the risk you are. So having a high credit score is a good thing. You are a lower risk, and you'll most likely be approved for whatever you are trying to get an approval for. So if you have a low credit score, you still may be approved, but you're gonna have a higher interest rate, which is what you don't want. So sometimes if you're, obviously, you're either approved or you're not. So if they do approve you, you're gonna get that higher interest rate. If they don't, they're gonna tell you they're declining you altogether and not giving it to you. So the highest credit score you can get is an 850, and the lowest you can get is a 300. So a score of 700 and above is considered to be excellent. It is very rare to have a score above 800, but people do. It can happen. But typically, most people, the average person with average credit, I would say, or fair credit, is somewhere in that 5 to 7 range. So you want to keep your credit score good, like we said, because you're going to get those better interest rates. You're going to get more options, and that's what you really, truly want. So like I said before, the agencies that they purchase from. So the three different credit unions that report your credit are Experian, TransUnion, and Equifax. So each of those agencies uses a mathematical formula, obviously, otherwise we wouldn't be talking about it, to compute your credit score. They look at things like how many accounts you have open, if you pay on time or late, the balance on any open accounts, and then your overall financial history. So basically your score breaks down to these components. Now here, because this is my copy that I printed out, it's in black and white, but on your screen in Google Slides, you'll be able to see those colors because you do need to know what those colors are. Otherwise this doesn't make sense. You don't know who matches with who. So yes, please make sure you have done that, get the right colors. All right, so your score is going to include all the good and the bad aspects of your financial history. Making late payments or no payments will definitely lower your credit score, and your credit score is updated every couple of weeks or maybe once a month, it depends. So while establishing a good payment history is going to raise your score. So you always want to pay on time. You want to pay as much as you can. It's important to note too that if you haven't opened any credit accounts, then you don't have a credit score yet. And sometimes people with no credit score are turned down for financing because the lender simply just doesn't know anything about you. They don't know what type of risk you are, so they don't know where to go with this. Sometimes you'll be asked for a cosigner. Sometimes your parents can open up a card for you first, and you can build, like they would cosign for the card, and you would be able to build up your credit. So those things are important. And like I said, big thing, pay on time. Don't be late. So it's important to know some of the fallacies, which are false things about your credit scores. Your credit score is not the only thing they look at when you're applying for a loan. They're going to look at your score. They're going to look most at the amount of debt that you can safely handle given your history. And part of that history is your income. So they're going to look at what you're bringing home, what your bills may be, or what you're paying out, and they will look at all of that. So a poor credit score will follow you forever. That is also, sorry, I forgot to tell you this. These things are not true, okay? These little stars are not true. So a poor credit score will follow you forever. That's not true. Your score does lower as the credit bureaus report their data if there's a problem. As you become more responsible over time, your credit score will also rise or increase over that time. So you can build up your credit score. It may fluctuate here and there, but like I said, you want to keep it in that good average. So credit scoring is biased towards minorities. That is not true. Your credit score does not include any information about you. It's only related to money. So it ignores anything dealing with race, gender, religion, marital status, all of it. My score drops when I apply for a new credit card. Sometimes that can be true, but most of the time it's false. If your score does drop, it won't be by much. This happens when you apply for too many credit cards within a short period of time. So you don't want to apply for 5 new credit cards within the same month. You want to get one, use it a little bit, have it for, 6 months or whatever, then maybe apply for another one. When you're looking for new credit all the time or in a small amount of time, they equate that to be a high risk. They feel like, okay, maybe they ran up their credit card and they don't have the money to pay it off, so now they're just going to get another credit card that they're going to run up. So that may or may not be the situation, but that's how they view it. These companies view it. So this is it. This is your FICO / Credit 101. And now you've got some examples here. There's a total of 8 examples. And like I said earlier in the video, you do have till Friday to submit this stuff. All right. Have a great weekend.